This is Chicago's very own WGN Midday News.
Wall Street tries to rebound after starting the day down 1,000 points. Investors are nervous about China's market crash and the health of the world's second largest economy. And Judy, we've got an expert who I think is going to tell us just that. Joining us now to talk about the markets, Cliff Morgan, president and co-founder of Strategic Wealth Management. Cliff, leave China out of this for just a minute. We've had quite a few years of very healthy returns in the markets. We were overdue for this, right?
It's been a phenomenal run.
Yeah.
I mean, the Dow was at just below 7,000. To go from 7,000 up over 18,000, we over doubled it. We almost tripled it. So we've had a great run over the last 7 years. And if you look at history, there needs to be a correction every once in a while. And a correction normally lasts for 6 months. A lot of people are saying it's different this time, but normally when people say it's different,
run like hell, right? When they say it's different this time?
Yeah. Absolutely.
Yeah.
And so this is kind of just the beginning then, because it's almost corrected itself within just a couple of hours.
Well, we saw it down 1,000, and then we went back up. So it needs to stay down there for a period of time. And history would say over a 6-month period of time.
Yeah. And you know, there are problems with the Canadian economy, which we do a lot of business with here in the U.S., of course, and of course China. But really, this is not about the U.S. Economy, because the U.S. is in pretty good shape, aren't we?
We're okay. I mean, China, once again, 8% last week, 30% in the last month. Europe has already started to feel the pain there as well. Here's my concern. You're finding the stock market really valuing itself off of overall revenue, not off of the profitability of a company. When I look at a company, companies are sustained through profitability, not just how much money is going through the door there. So a correction is healthy because we should be looking at the profitability of companies.
Let's change gears a little bit and talk about the investor, the average investor, because now is not the time to start making big changes.
Spot on, correct. The average investor gets half the rate of return as a professional investor because the average investor buys high and sells low. So right now is probably not a good time to sell. If you have a financial advisor, wherever you're getting your financial advice from, don't make a knee-jerk reaction. Normally you would wait for the stock market to go back up a little bit and you would reallocate at that point in time.
You know, it was expected the Federal Reserve might raise interest rates in September at its quarterly meeting. Do you think that? Do you think they might hold off on that now?
Yeah, I think it depends on what happens over the next few weeks here on this. I mean, with what's happening in China and what's happening in Europe, that could change the direction of what's happening there, especially if we saw today's numbers actually go down over 1,000 points, and it keeps on precipitating down there. Yes, I think that would change the conversation.
Right. Are there buying opportunities right now?
Yeah, once again, I mean, I would not make a knee-jerk reaction, but I love to buy things on sale. I don't know about you.
I do
and right
too.
now could be, if you're a longer-term investor, right now is the time to buy.
Yeah.
Buy low, sell high.
Yeah.
All right, Cliff.
It's so simple and yet so hard.
And
for
so hard
many
and
people to
scary,
do,
right?
You've got to take the emotion out of it.
Thank you.
Right.